So I guess I'll give kind of a little bit of background on myself. Sean McNulty, principal and co-founder of XIB Financial. We're a merchant bank and special financial advisory group focused exclusively on the cannabis sector. And I've been an investor in cannabis kind of since 2013. We started XIB because our perspective was that the worldwide commercialization of cannabis and the regulatory reform that surrounds it, we believe is one of, if not the most compelling investment opportunity, maybe even in the history of capitalism. You've got a $200 billion a year industry that already exists. All we're doing is changing the source of supply, and we're doing it in a way that has tremendously high barriers to entry. And from an international perspective, because this regulatory reform is just kind of slowly ticking away, the opportunities in each one of these unique jurisdictions are quite compelling. So I've got a great group of panelists up here today, I think, to share a few stories from domestic and international perspectives, Canada, US, and all over the world, so I'm happy to introduce them. To my immediate left, we have Jason Wild, chairman and the largest individual investor of TerraSend, which is one of the Canadian ACMPR licensed producers. He's also a specialty pharma investor and fund manager here in New York, so I think offers a great perspective on some of the cross-border issues and some of the opportunities. To his left here we have Jonathan Rubin, who is co-founder and CEO of Cannabis Benchmarks and New Leaf Data, tracking data worldwide, and I think evaluating some of the data and the analytical aspects of this cannabis industry. Access to this information is one of the most important tools we need to allocate our capital efficiently. It's pretty interesting to hear what he has to say. To his left, we have Peter Miller, founder and CEO of Slang Worldwide, which is a brand consolidation platform. Recently raised a significant chunk of capital. We're bringing their entity public in the very near term. A lot of compelling stories to say, I think, south of the border and in Canada, whereas Peter's had considerable experience in both. To his left, you have Daniel Pearlstein, who's EVP of Strategy for Canopy Rivers. Daniel was previously one of the industry's first thought leaders as a research analyst at 8 Capital. So it's kind of seen this industry evolve from its really grassroots to where we are today, where we're starting to see significant amounts of institutional capital enter the picture. So I'd like to maybe give each of our panelists a couple of minutes just to give a little bit of background on themselves, perspective as to why they got into cannabis and why they've taken their initial kind of foothold in what they're doing to explore this global opportunity. Jason, maybe you can kick it off.
Sure, thanks. Is my mic working? Do you guys hear me? I'll put my mic's working. Right? I guess I'll just talk. We have, over the last 19 years, we've invested mainly in healthcare companies and more specifically in pharmaceutical companies. In 2014, got a call from a banker up in Canada that I did some business with. They were raising some money for a company called Metrum. Decided to take a trip up there and see what it was all about. Met with them, learned about the whole Canadian program that was being rolled out. It was sort of new and exciting to me. On the way back, actually, to the airport, to Toronto Airport, I called up another banker I knew and told him that I needed him to introduce me to whoever it was that knew the most about the space in Canada, because I wanted to get up to speed as quickly as possible and hopefully invest and build a real stake in the sector before it really took off. This banker introduced me to the gentleman to my right, Sean McNulty, who worked at a large fund and a large investor in the space. I guess he was about a year ahead of us, and got to know Sean. Looked at a lot of different deals with him, and we ended up investing that first year in about 7 different companies in the Canadian cannabis space, including Metrum, CanTrust, and a few others. We have selectively invested in others since then, and then last year we took a control position in TerraSend. I wanted to have a platform where we could really help drive growth and have a little more control over the result than just passively investing. First person I went back to was Sean to get him involved in it, and that's why Canopy Rivers and Canopy Growth actually are large shareholders in TerraSend as well.
Thanks, Jason. So Jonathan, you've got a great kind of financial business and industry data background. Maybe you can give us a little history of how you got into this sector and why you think your franchise is in a little special spot here.
Sure, thank you very much. So my name's Jonathan Rubin. I'm the CEO of Cannabis Benchmarks and New Leaf Data Services. We also have a Hemp Benchmarks division. And we are an independent, unbiased reporter of price. And so what we do is each week we collect thousands of transactions, wholesale transactions for cannabis flower across 17 wholesale markets in the U.S. And we use the same statistical analysis that's used to develop benchmarks for other commodities such as wheat, soybeans, and corn. And each Friday we publish a U.S. spot index, which is an aggregate, statistical aggregate, volume-weighted average benchmark for the U.S. Cannabis flower price. And then we do benchmarks and indices for each of those 17 markets. And now we're about to expand into Pennsylvania. So we're U.S. focused. So what we do is, again, we take thousands of transactions, we throw out the outliers, top and bottom 5%, and do a volume-weighted average, and we look at it by grow type, so cultivation method, indoor, outdoor, and greenhouse. And each Friday we publish those prices. Some are via subscription, some are for free on our website. And what our goal is to provide, take what is otherwise an opaque market, where pricing information is really unknown between and just known by bilateral transactions, and shed some light onto that so that people can make informed decisions. So whether someone is involved in the direct value chain from growing and processing and retailing, an investor looking at the space, a crop insurer that wants to build actuarial tables to help settle claims, a consultant that needs to support a case, attorneys, equity and debt analysts, et cetera. There's a broad need across those who touch the plant and those that are ancillary and professional services that support the industry to have validated independent benchmarks. And so for that reason, we don't invest in any cannabis businesses or any stocks. We have no conflicts of interest. Now, we also have an implied forward curve that goes out 6 months based on the forward transactions that people are reporting to us. How much are you paying today or agreeing to pay today for prices for delivery sometime in the future over the next 6 months? And so that gives some indication about the forward market. And so we are focused on the U.S., but because the international markets are very opaque, our experience and our observations are very meaningful to the international community, which is, again, largely opaque. And so, for example, we see our benchmarks being used around the world by debt and equity analysts that are looking at stocks and bonds. And OSCAN, for example, used our prices in valuing a Chilean inventory. And so we're planning on expanding internationally, but the point is that there's incredible lessons to be learned in the U.S., not only because of how advanced the U.S. market is, but because each market is so different, and you have very tightly controlled small medical markets like Connecticut, and then obviously the large, very mature competitive markets like Colorado and Washington and Oregon and soon to be California. And so we have many kind of mini models that are analogs of what might happen in Toronto versus British Columbia versus Australia versus Germany. So we're excited about the information that we bring to the market. In terms of my background, I'm a 25-year plus commodity guy. Started in energy commodities and then moved into the whole energy spectrum. And petrochemicals and refined products. And about 10 years or so ago, I was working for S&P Global Platts, managing their energy analytics division, and that's where I really learned the benchmarking business, because if you know S&P Global Platts, they are the world's leader in commodity benchmarks. And so about in the 2012, 2013 time frame, I was kind of looking at what was happening in Colorado and Washington, said, hey, I can't be on the sidelines for this. And actually started thinking about, hey, where would I want to make an investment? And making the long story a little shorter here, was looking at investing in a cultivation operation, and there were only about 4 assumptions that mattered in their pro forma, right? And the 2 most important to me were, what's your cost of goods sold and how much are you going to get for it? And the assumption in their pro forma was $4,300 a pound. And we're like, well, where did you get that number? And it was just, well, that's kind of our expectation. So our reaction was, well, so you don't have a valid number. Your pro forma is based on your expectation, your fantasy, not anything that you could put your thumb on. And that was the epiphany moment where I said, hey, wait a minute. I've got 25 years of commodity data experience. This is what I should be doing. So look forward to going a little bit deeper with the rest of the panel. And thank you all for joining us at the summit and this panel.
All that data should give you some good edge in allocating some of this capital. Peter, maybe you can give us a little background of kind of how you got in, because you got an interesting perspective both sides of the border from the kind of the brand and infrastructure side of things.
Yeah, I'm from Canada, and like most of these guys, I've been in this space since as long as it's been legal. So for me, that was 2013 in Canada. 2012, when I started seeing the writing on the wall, Health Canada said they were going to do this new program, and I was in tech and knew nothing about cannabis, and I joked that my competitive advantage in getting a license was that I didn't know anything about cannabis, because I think the government was looking for people that would pass really strict background checks, and like every territory that opens up, they only license people that are least likely to embarrass them. It's a stigmatized industry. So if you're the bureaucrat or the politician that licenses the guy that turns out to be like the front dude for a criminal organization, that's not good for anybody. So they find people that don't know anything, that are going to invest the money to try to get this thing off the ground. And I got incredibly lucky. My business partner, Billy, and I started one of the first licensed producers, which quickly became kind of the production nucleus through a consolidation of the second public licensed producer, which was Metrum Health Corp. And folks like Jason made bets on us at a time where that was a pretty gutsy move. There was no Justin Trudeau rec concept. It was just, this is medical. It's really hard to get a license, but it's also really hard to get a prescription. And how big is this market actually going to be? And obviously, we've all seen what's happened since 2013. And people with conviction rode that stock from $250 when we went public into whatever $70 odd that it converted to and became Canopy stock. So there's some people that did incredibly well because they believed in the space. But it wasn't obvious back then. Canopy Growth, as I mentioned, acquired 100% of Metrum Health Corp. And for Billy and I, that was fantastic. I mean, for almost everybody involved. But our thoughts turned to what kind of happens next. And by 2016, 2017, Trudeau had won. Canada did appear to be moving towards, the first G7 country with recreational cannabis available. And the U.S. kept opening up more and more states. Markets started maturing. You started being able to get a sense of where things were going. And our view was that America was the place to focus. Obviously, there's things that are holding back sort of liquidity and access to capital in the U.S. But at the end of the day, this is where the most cannabis is being sold legally and changing hands. This is where brands are being built. This is where the culture is coming from. And so that's why at Slang Worldwide, our view is, okay, early having a license is great. We rode that wave. That was awesome. Talking about square footage is fine. But what happens as it becomes a commodity and square footage isn't like that unique? Well, it's going to be like CPG and in any other category. What's important is your brand and its distribution. So at Slang, our whole view is owning great brands with the best distribution. And we own bits of the supply chain where we have to now, only because the industry is not mature enough to third-party find co-packers like you would if you were Unilever or something. But I think that's ultimately where it goes, and that's why our focus is best brands, best distribution. So. Our focus is the U.S., but it's really anywhere where cannabis, there's a real market for it. Canada's opening up soon, and that'll be really exciting. And even as a proud Canadian, though, I identify the fact that America is where a lot of the culture comes from that the world consumes. We have a few points of pride from Neil Young to maybe James Cameron, but we also gave you Celine Dion and Bublé and
Justin Bieber
and a handful of others. So ultimately, my bet's on American brands that will find their way out into the world, and that's kind of our focus. And with a rec, it's kind of bend as well.
And Dan, you've kind of had a pretty interesting transition. You've gone from covering stocks outside of this industry to being one of the first people writing reports on cannabis companies to now jumping in with both feet on the corporate side. Maybe you can give us a little perspective on your path and why you chose to take it.
Sure, thanks. So my name's Daniel. I'm the EVP strategy at Canopy Rivers. We're the corporate venture capital arm of Canopy Growth, and we're actually listing publicly next week as RIV, R-I-V, on the TSXV. So the company's going public next week. Canopy Growth owns about a quarter of the equity. The rest has been raised by institutions from around the world. And ultimately, what we hope to provide is almost a lens into the industry, giving investors exposure to private ancillary businesses as well as private international businesses. We've already developed an ecosystem of high-quality producers throughout the entire value chain that we hope to supplement with investments around the world. My background, as Sean mentioned, is from the equity research side. So my experience is about 5 or 6 years on the sell side, a couple years in healthcare venture capital before that. So I was working with biotech and medical device companies, came to the sell side, started covering the same, and then around late 2013 is when I was told to look into the soon-to-be MMPR, which are the regulations in Canada. So let's give the medical marijuana sector to the healthcare analysts, and that's kind of how I got in. So I approached the sector from a healthcare and pharmaceutical angle, but really the cannabis sector spans a little bit of both, from CPG on one side and pharma on the other. Really, these are disruptive consumer products backed by healthcare and medical data to create functional brands that are disruptive to a number of industries across the board. And ultimately, at Canopy Rivers, we're looking to bring in experts from outside industries who want to get into cannabis. And we've been building a portfolio of 11 investments and counting so far. So happy to be here.
Thanks, Dan. So we've got, I think, a pretty good collection of money that's gone into Canada, and Canada being, the first G7 country in the world to really undertake this full regulatory reform with cannabis, with full recreational legalization on a federal and provincial or state level. Why do you think that Canada has been this beachhead, and how are you able to use Canada as a lily pad to kind of take your businesses to the rest of the world, because this really is an international opportunity? Maybe Jason, you can start off. Your fund has been probably one of the biggest, if not the biggest investor in the Canadian medical cannabis sector, and now ultimately the rec cannabis sector. What really brought you to Canada?
Right. So first of all, I run a healthcare fund, so we like to, instead of medical and recreational or medical and adult use, we like to call it prescription versus over-the-counter. They are.
It cures what else?
Yeah. Exactly. Whether it's J&J, Glaxo, these are companies that play in both the prescription and the over-the-counter space. They still have a regulator, whether it's the FDA or Health Canada. They still have to have good quality assurance. They have to focus on different formulations and have to have different recall procedures and have a similar supply chain. So that's the way that we like to look at it. That's also why I thought there was an opportunity here in terms of for TerrAscend, because I do have more of a pharmaceutical background, and I feel like a lot of the companies that are in the space, they're making formulated products and the kind of things that drug companies would be making, but these companies weren't really being run by pharmaceutical people. So we felt like there was an opportunity for us to have a company that is a little bit more pharma-like, and that doesn't mean spending a ton of money in R&D and being the next GW, but it means maybe being a little more focused on quality and standardization and making sure that every liquid filled gel cap in the bottle is exactly the same strength. Let alone, in the traditional pharmaceutical world, every pill in every bottle in that lot needs to be the same, and every pill with that sticker on it saying the name of the product that is made over the course of a year is supposed to be the same. So we felt like there was an opportunity there to have a company that is a little more focused on that aspect of it, but it doesn't mean only being on the medical side. In terms of Canada and why we were attracted to Canada first is because when I went up there that first time, I met with Metrum and learned all about the whole program. I realized that Canada had the opportunity to be the leader in the world, especially because they were going to be allowed to export to other countries. And my view was, as long as the U.S. couldn't get its act together and was sitting it out, that Canada was going to continue to lead in this space. If you asked me back in 2014, I would have already thought that the U.S. would have cleared all of this up, but on a federal level. But they obviously they haven't, which has given the Canadian companies more opportunity to flourish, which is certainly what they have done so far. I think the U.S. certainly the dominoes are starting to fall. John Boehner going on the board of Acreage was sort of, to me, a seminal moment that I said, there's too many powerful people who are getting involved in this space, especially, going on the board of Acreage, which is a U.S. rec-focused company or OTC-focused company. So that's what made me realize that the U.S. is it's coming. The U.S. is the best market in almost every industry, and in the cannabis industry, it's no different, even with all the roadblocks that have been put up so far in terms of having every state is sort of like a country unto itself. I think that's all coming. We're focused for TerrAscend. We're focused on in Canada and on rest of the world other than the U.S. for now. But anybody who's been involved in this space for the last 6 months or so at least knows that the U.S. is going to be a very large part of the overall industry.
To add to that and maybe lead into Peter, is from what we saw, to give you some context to the background of Canada, is it started medical and only within the last couple of years has really gone recreational. And the government regulations in Canada about 5 years ago forced every license holder to be vertically integrated. So it put these companies, or those who became successful, in a situation where they had to be big and think scale, and put in very strict regulatory standards for the production, tracking, and reporting back to the government on a sometimes bi-weekly or monthly basis. So it really set the bar at the highest it's been set ever around the world. So it's really from a regulatory perspective, and that was done because they wanted to help control some of the supply chain, whereas patients previously were allowed to grow their own. The government then put in a system saying, okay, instead of monitoring a few thousand licenses across the country, let's just give it a dozen or two companies to actually control that. So then that's why companies like AgriFarm or Metrim, as we've been talking about, actually got into it. It's because the bar was set so high by the regulators that at a certain point you have German delegates or Australian delegates or Brazilian delegates come over, take tours of these facilities and say, how do you do it in Canada? Because we need to learn how. How do you set the bar so high? How have your companies been exporting to our markets? We need to know a little bit more of what you're doing. And it was that desire to put in very strict regulatory regimes along with bringing in high quality operators, which is really why I think Canada is leading the world.
Yeah, and I think it was done to an extreme in some ways when Daniel talks about vertical integration and the bar being set high. When I walk through our Canadian facility now, after seeing so many others around the world, and as regulation has become a little bit more reasonable, I laugh at the fact that we have this bank vault with this 3,000-pound door with 8-inch thick poured concrete walls with seismic sensors where if I hit the wall, the police are coming.
Well, you don't want to give away too much.
Yeah, well, then inside this room is a bunch of cannabis, which on a per gram basis is the cheapest of any of the controlled substances in Canada. Health Canada has it at $10,000 a kilo on the street, with fentanyl at $3 million. And meanwhile, you can go to the pharmacy where there's very little security. There's certainly not a bank vault. Steal the Ritalin for the kids, the opiates for the parents, or even easier, go to the vet, the large animal vet down the street. We're in a rural area, and just steal the horse tranquilizers. So like, it's not that reasonable. It's not that practical a set of regulations, but it kept people out. It made it really expensive. It made it really hard, and then that allowed a few people to maintain dominant positions. Big capital came in. And then the international story started taking off a little bit. But I think it gets, the bars definitely come down objectively. The regulations have loosened up. There is more cultivation. There is more commoditization taking place. And it's way more extreme in the US, where in some states that have been around for a while, whether that's Colorado or Oregon, the pound price could be a tenth or less of what it is in a new state. So you can kind of see these commodity trends. You don't need a crystal ball necessarily to say what's going to happen in Canada or what's going to happen in any new state. It's like your crystal ball, it's called Colorado, it's called Oregon, and everything will happen in a similar way. It'll just happen faster, and that's why brands will become increasingly important. I was sitting in the hotel room having a chocolate bar from the snack thing last night, and I was looking at how expensive this thing was, and I wasn't thinking how many milligrams of cacao is in this thing. That's not the expensive part about that. Similarly to these cannabis edibles, the milligrams of THC are becoming not the most expensive part of the product. Like, we just launched this pressed pill, single serve, point of sale kind of impulse buy product. It's a couple dollars at the cash register, but the cannabinoids in that product cost us about 5 cents. So you're seeing where more people are touching the product in terms of the supply chain and the different value-added parts of it and the packaging and all of that, ultimately becoming a finished price. But I'm getting away a little bit from why Canada was the leader, but having that position in Canada to kind of build the experience, get the capital, use that position to then make bigger moves into the U.S. where the rubber's hitting the road in a way that it's not anywhere else. That gives you a reality check that then says, okay, how do I use this currency, this capital, this position in Canada to be more practical and a little more targeted with what we're doing. So from our standpoint, we've learned from Canada. It's been a great experience, but we know we don't need to spend 9 figures on greenhouses to make an impact in California. We can just buy wholesale.
And you skipped over, obviously, the capital markets. That's also another reason why Canada's the leader. I think.
Basically, it seems it's all centering around regulations. You've had in the U.S., you've had cannabis be legalized even for adult use long before we even had our formalized federal medical program in Canada. But because we did have such intense and onerous regulations implemented on a full national scale in Canada, we've almost had this artificial moat built around our capital markets because you have Health Canada or the federal government as your auditor. So it felt like the safest of the kind of gray area places to put money into this opportunity or investment opportunity early. And as Canadians, I think almost in a selfish manner, I hope this moat lasts for a little bit longer. But we're seeing on a daily basis new jurisdictions, whether it's individual states in the United States or new jurisdictions globally, undertaking their own reform. And it's really starting to open up borders. And when those borders open up, it's kind of interesting to see whether or not we see cannabis and the cannabinoids or active ingredients that come from it. Does this become a global commodity? And does the data that you're getting from Colorado or California or Washington, once you have those borders get open even within the states or looking internationally, how do we look at cannabis as a commodity? Are we going to see this just priced as a forward curve, same as sugar or oil or barley? Kind of maybe you'd offer some perspective on that, Jonathan.
Yes, I just want to come back to the prior question, though, about Canada as a beachhead. And I think there's multiple perspectives on that. In many ways, it is a beachhead, and in some ways, it's not. And clearly, the single most important element that makes it a beachhead is the federal legalization and acceptance and support of the market. But in terms of the perspective of Cannabis Benchmarks, we were looking forward and very excited to get into the Canadian market. But as many of you know, the medical market was direct to consumer, so there was no wholesale market. So when you think about a beachhead, yes, certainly the federal legalization of the medical market allowed that to happen, but there hasn't been the opportunity to develop into a commodity market and wholesale markets. And also with Canada, first of all, we also see many of the large players looking for optionality by investing in America and other countries. So they're moving. They've got their roots in Canada, but they're branching out into other countries. And the U.S., the European market are significantly larger markets that are obviously going to be developing hopefully in short order. And then additionally, this is a marathon, and we're not even at the end of the first mile here. So it's clearly, I'm not alone in the room here hoping that the U.S. follows suit and we see federal repeal of prohibition here in the States. But I think that there's arguments for Canada being a beachhead, but there's also reason to just step back and say, okay, they're leading the way in some ways, but what the world of cannabis and hemp look like internationally 5 or 10 years from now, I don't think anyone can predict.
Like it was mentioned a couple times here on the panel already, is that a lot of the big Canadian producers or investors are looking at data that's already in the U.S. to try and project out what Canada could look like. It almost seems that, in some ways they're further, in some ways they're kind of behind.
Yeah. Sorry. So, and that's interesting. And you had brought this up, Peter, about how the Canadian regulators and the analysts were looking at Colorado and and Oregon and Washington as an analog for what might happen in Canada. And so I'm not an equity analyst or a debt analyst, but what I always want to stress is the importance of understanding the exposure to wholesale price risk that a company, whether it's plant touching or not, may have. And the analysts, their valuation models were built on what Colorado looked like 2 or 3 years ago and what Oregon and Washington looked like 2 or 3 years ago. So one of my key questions is are the analysts updating their models to reflect this continuous price erosion we've seen in the more mature, more competitive markets?
Jason, you had a quick question.
Yeah, I was just going to, well, first of all, on the whole sort of commoditization side, I look at this industry a little more like, coming back to pharmaceuticals. I look at it a little more like the generic drug industry, which is not a pure commodity. There's not a spot market and all these intermediaries that have their hands in the transaction. In the cannabis industry, you're going to have maybe at most 2 or 3 different players touch it in between the formulator of it and the end consumer. So I think it should be able to hold up better than pure commodities, especially when we come to branding and creating brands. I think there's also going to be an opportunity on the retail side in owning that relationship with the customer. Canada, obviously, Ontario is going to have private retail, but even as we look in the U.S., I think that the retailers and the dispensary owners, if cultivation prices and prices on the raw material goes down significantly, that is going to affect end consumer prices and affect the dispensary. But I believe that they're going to be able to hold their margin a whole lot better than the grower is. And if prices come down enough, and the dispensaries are passing along most of those savings to the consumer, I believe we'll actually pull more demand out of the black market, because now the products will be more competitive on a price basis with the black market. And anyone who knows a little bit about cultivation and production and all that, I think would rather buy product from a licensed producer that's not spraying pesticides, hopefully, and other things that the black market is most surely using to increase their yields.
Well, I think that touches on a point in terms of why Canada made these regulations from the first place. Is it was everyone growing their own, and maybe some of it was going out the back door. Maybe that was what was supplying some of the...
Every grower and their 1,000 closest friends.
Yeah, exactly.
And there were like 40,000 growers.
So the government wanted to put in some control and have some oversight and have a QA stamp of approval before every lot release, a lot like you were talking about. And initially, Jonathan, to your question earlier, this was just a direct to retail. Just Canada's only allowed to mail it. That's the only legal way. You need a prescription from your doctor, and then receive it in the mail in an unmarked package. It's the only legal way you can acquire it in Canada right now. Legalization is expected to start in about a month from now, but in terms of wholesale pricing, it wasn't until, call it a year and a half ago, until we got some real good idea that the provinces, the liquor boards, in fact, are going to be the distributors, the middleman, the wholesalers. And then that's when analysts, investors, and so on, and companies even started updating their models in terms of what does my pricing look? I can go direct to consumer medical, and that's obviously high margin, but I'm probably going to get a lot of volume selling to the province at some sort of wholesale price. And those numbers, I think, to justify stock prices will continue to be as high as they can for some time.
It's pretty much only good news baked into some of the Canadian plays at this point. And obviously there's an international story that I think a lot of these hinge on now, the investment thesis for a lot of these names, and just the pure Canadian cultivation plays is a story that's pretty dead. And you've seen a separation into kind of haves and have-nots, which is a healthy and important thing. But more markets are going to continue to open up, so you have to look 5 years from now and say, what does this look like? And it probably mirrors just the rest of industry generally, with America being dominant, having the largest consumer economy. And these markets open up pretty quickly because, I joke that the most addictive drug in the world is tax revenue. And the most dangerous thing about cannabis is investing in it. And so, like, to that end, like these like Colorado especially, they've taken in 9 figures in tax revenue. That revenue is being enjoyed by the taxpayers, and they're getting stuff for it. And it's also a bit of a swing state. So it would be very difficult to just say, okay, industry's over. Sorry, Colorado, your 6 and change million people no longer get to have that $150 million a year for your budget. And we're going to take away the thousands of jobs that rely on the industry and the $1.5 billion in sales at the cash register. There's a multiple of that in total economic activity, and it's a swing state. So I think that happens. New states open up that see that. They want a piece of the tax revenue, and it happens a lot quicker. So it's not like a linear thing. It's logarithmic, and it just happens market by market by market, and it's happening here really quick.
Agreed.
And the added benefit, I think, when we first started investing in 2014, I don't remember talking much about this, but
How many patients do you have?
no, how many lives have been saved by people starting to use cannabis in place of drinking alcohol and going out and driving? And it's not just the alcoholics that are dying, but other innocent people.
Opiate
And
overdoses are down in Colorado since legalization.
So that was just sort of an added bonus, but I think that is certainly helping with public perception and getting people to come around.
And it's not just U.S. states that are starting to realize this, and these are entire countries. So the UK, I think, was it 4 to 6 weeks ago or so, mother had a child that was using some CBD medication. All of a sudden, they ran it all the way up to government in a week. They said, all right, we're going to legalize medical cannabis. And then they come to Canada and say, hey, teach us. We need to put in, the government's just said this is legal. We don't know how to set up a regulatory system, or what rules or what kind of companies or best practices or key performance indicators do we need to run businesses like this. So that's why you have, I think, nearly 30 around countries around the world that have enacted or are in the process of putting in medical cannabis regulations. And so it starts medical, and maybe some of those countries go recreational over time, but that's part to Peter's point. It's not just cultivation in Canada. It's, okay, where's that next frontier?
Also, to Peter's comment about the tax revenue.
Peter's got a lot of good comments today so far.
Yes, thank you. But just for context, if I hope I get the numbers right, but my recollection is that Colorado tax receipts in 2017 for alcohol were 47 million, and for alcohol was 147 million.
Cannabis.
For cannabis. So it was 3 times as much for cannabis than alcohol. And you guys are obviously everybody's seeing it, that the alcohol players are moving in big time, not just in Canada, but US, and a lot of it's happening under the radar. I mean, most people are familiar with the Constellation Brands investment, which was big, but also some of the big players in alcohol that aren't as familiar in the cannabis sector, like Southern Glazers and Breakthrough, which are big. The top distributors of alcohol in the U.S. have moved into Canada in a very big way, and they're kind of like the Hatfields and McCoys. Like, one makes an investment, the other has to up it. So, when they see those tax receipts going down in Colorado and it's directly linked to their sales, they're obviously making plays to take advantage of the cannabis markets and the hemp markets and the CBD markets, and those companies may take a hit in the near term, but long term, I think they will be very well integrated with the cannabis market.
So whether it's
pharmaceutical companies are coming as well.
Whether it's kind of medical or rec or prescription versus OTC, you've got one category where we're developing CPG products and brands in a kind of a vice category that's really has a harm reduction theme, right? Less harmful than alcohol, less harmful than cigarettes. And on the medical side of things, or the therapeutic use side of things, you've got, again, this is potentially an alternative to opioids, but the data's not really there yet. And in each one of these international markets, we're starting to see some undertake regulatory reform around a medical or therapeutic use of cannabis, and some going straight to the kind of CPG brand development side. And I think on this panel, you've got at Slang, you have a very strong platform that you're building brands and going after what's actually on the package rather than what's inside of the product. And then from Jason, you got a little bit of a different perspective looking at it on the medical side of things. So how do you see your portfolio allocation and even the businesses that you're investing in going into these new markets, whether it be from a medical or a rec side of things, or where do you see these worlds colliding or separating?
I mean, I think that in a lot of places, the medical and recreational designation is like a tax treatment So you go into a dispensary in Colorado and you could buy exactly the same product from a different counter and pay the tax on one and not the other. So locals who buy a lot will get their card so they can do that. That's kind of more the cynical way to look at it. But then there's true medical benefits, and I'm not disputing that whatsoever. And I think that there are going to be some major breakthroughs, and there already have been some. But those are going to happen by big pharma or medium pharma. I don't know pharma that well, but it's not going to be me. Like, I'm not AstraZeneca, and I'm not going to be able to go to an investor and plausibly suggest that I'm going to, compete with Purdue or somebody. But I can, tell them we have the highest selling cannabis product of all time, is tracked by a third party, and that's real, and that's today, and that's something, that's more of a cultural thing, and different countries internationally, as they legalize, are doing it partially for practical reasons and some for altruistic. Talking about the UK, the catalyst being the girl who was sick, who needed the CBD for epilepsy is great. Billy and I were in the Greek Parliament in January and talking about their program and how they were looking to legalize for medical, but you got the sense that maybe it was more of a revenue opportunity in their eyes, where they were going to produce and export. I mean, you gotta look for the low-hanging fruit, and cannabis production in that climate could be very interesting for export to Europe. But I mean, a lot of countries are kind of thinking that that's going to be their economic anchor. So even as Canada, with their beachhead, it also is a little bit of an enviable position to see how many jobs, how much investment's been made. So each country, I think, is going to kind of try to do their own thing. I think globally we're moving a little more protectionist than open. So it wouldn't surprise me if import only in Germany turns into a pretty robust domestic market.
Seems easier for the politicians to start with a medical platform and something a little bit more CBD focused. The CBD has become this new rage because it's not psychoactive, so it's easier for a bureaucrat or a politician or a corporation to get behind something that's not getting people, quote unquote, high until society embraces it. So how do you kind of look at that from the medical perspective, thinking that we're going there first medical and then maybe rec, or maybe never rec in some jurisdictions?
Yeah, I mean, I think all of these jurisdictions start medical, and when everybody's not running around with their hair on fire and pillaging each other, they realize that it requires a little less regulation, and it can be sold OTC or without a prescription. And just to be clear, I like, my view is we want to participate in all aspects of it, not just for approved for indications like epilepsy and things like that. My view is that people who go in and buy it over the counter because they want to use it when they get home at night from work in place of a glass of wine or something like that. It's still, to me, it's still a medical use. What we're treating is the human condition. It's still to me, it's still it's very similar to the way you market it is different, but that's the same way that NyQuil is certainly marketed differently than prescription products, where you're promoting to the doctor on prescription products usually, and you're promoting to the consumer on over-the-counter products.
I think there's a very interesting point that was just kind of made in separate statements about CBD and regulators being more open to it because it's non-psychotropic and non-psychoactive. And then your comment
CBD,
about
by the way, is cannabidiol, and it's one of the most commonly occurring cannabinoids in the plant.
Yeah,
It's non-psychoactive.
Yeah.
Is it non-psychoactive or is it non-intoxicating?
Oh, that's a good question.
Yeah.
I mean, if we're saying that it's used for anxiety, then I feel like it is psychoactive, but it's certainly non-intoxicating. It doesn't get you high.
Oh yeah, no, that's a better way to put it.
So, but the convergence here, though, about governments being more accepting and opening markets on the medical side and embracing CBD and those that don't get you, the cannabinoids that don't get you high, and then marrying this with this concept of globally what's happening now in terms of our markets opening or our countries becoming more protectionist. Well, from the cannabis benchmarks perspective and benchmarks and thinking about wholesale markets and trading and the commoditization of these products, CBD and CBD isolate and CBD distillate are probably of versus wholesale versus flower is very well positioned to be a standardized product that is traded on a futures exchange, and that's going to accelerate obviously global commerce and global exchange and development of these global markets. And also just in terms of CBD, and you pointed out, that's just one of hundreds of cannabinoids.
Yeah.
And so that's all the rage right now, but as research continues, maybe CBN or CBG or one of the other cannabinoids, in 2 or 3 years we realize, wow, it's a miracle as well.
Yeah. And CBD internationally is also kind of a stepping stone. Like CBD is the gateway compound to THC in some places, and you're seeing huge uptake in recreational CBD use, if you want to call it that. I think Billy and I will be going to Italy in the next couple of weeks to look at the market there, but effectively you have now 1,500 stores in that country selling CBD buds, CBD pre-rolls. People are going in to buy it and smoke it instead of a tobacco cigar or a cigarette. And it's helping probably destigmatize cannabis a little bit because it looks exactly the same and it smells exactly the same. Now, it's hard to tell someone if you're smoking a CBD joint at noon outside your office building and they, who's trusting this guy with anything? It's like, oh no, it's CBD. There's no way to know.
Right.
But if they're seeing that guy and then they see a more senior guy and they see it's more normalized, I think that benefits the global marketplace. And it helps move it away from the reefer madness thing to more of like okay, this is just a lifestyle product people are consuming in conjunction with or in lieu of an alcohol, product.
Really is globally accepting that change. And we're running out of time. I wanted to open it up if there's any questions from the audience for any of the panelists or any kind of international side of things you wanted to hear us talk about here.
Yes, I have a quick question about your view of the retailing model that you think will prevail for the U.S.
Mm-hmm.
Right. So, will it be a new paradigm, or could it be like, or would it be, in your view, like liquor stores or cosmetic stores, coffee shops, or the CVS's of the world? And they're all different feel and different model. Right now, they feel kind of like jewelry stores, right? But I don't think that's what will last. So, within our firm, we talk about this a lot of what we think it will look like. So I'm curious to know what you guys think it will look like and why.
Just so everyone hears the questions on what does the retail paradigm look for cannabis in different jurisdictions in the States and around the world? Are we taking a jewelry store model? Are we taking a liquor store model? Are we taking a convenience store model? And how do we see that type of retail environment proliferate? So we'll throw that out there to the panelists.
I'll hop in just really quickly, and this kind of goes to what Canopy Rivers is trying to do in building an international investment ecosystem around the world. And bottom line, it comes down to regulation. I think that's kind of a bit of a cop-out answer, but I think that comes down to regulation. So, we might look at something in Italy that's different than we look at something in Jamaica. So maybe Italy wants to grow hemp outdoors, but Jamaica just wants to go maybe closer to that recreational outdoor stuff. So I think the retailer, if a state or a country rather, in many of those ballpark 30 countries that I alluded to earlier, are medical first. Many of them distribute through pharmacies. So
in the U.S.,
and then
it's not going to be any different than any other industry. And this whole jewelry store thing is like the $250,000 bank vault I have in my facility that I now store hard drives in because I can store the cannabis in a normal room. I think that retail stores are going to face the same pressure that any other retail store faces with a trend towards online and delivery and stuff like that. I think right now retail has a heavy sort of noose around its neck with 280E, like the tax treatment that makes it really hard to be profitable in retail. And for us, we don't own retail, not necessarily because we think it's inherently a bad business, but as a brand owner, if you own retail, it's really hard to get other retailers that you don't own to carry your brands. So we're in 1,500 stores across the U.S. We own none of them. That's allowed our brands to become very dominant across the states that we're in. But the same way, Whole Foods isn't going to carry the Trader Joe's house brand and vice versa. We're seeing that with brands. So your ability to get your brand out there is equal to your ability to open new stores, which is capital intensive, time consuming. And what happens if the few strokes of a pen allow Amazon to ship cannabis or Postmates or Uber Eats, and then all of a sudden, it's like, is it a pizza boy model or?
Brick and mortar, kind of a digital and brick and mortar.
Right.
strategy.
Location, convenience,
Yeah.
Will it be a liquor store where you walk
service.
in and there's 300 brands,
Right.
and they don't shine, particularly from the shelf. Or if you look at cosmetics, where they have a vertical.
I believe it's going to be more like a liquor store. I think with cannabis generally, there's some magic in the product, the formulations, and it's not to disrespect anyone in the industry, but I think a lot of it just mirrors CPG, and anyone who claims they have some sort of crazy new concept is just like maybe benefiting from a narrow window of regulatory kind of, you know.
But also in terms of the product mix, it's going to be driven in large part by how informed and educated the consumer is. And they're becoming more and more educated, and their perspectives are becoming more and more refined. So when we think about the analog of alcohol, I agree it's going to be more like an alcohol a liquor store where there's a lot of different brands. But you know, the 21-year-old who goes into a liquor store for the first time, you know, the only thing they care about is what's the alcohol percentage. They go straight for the grain alcohol, and there's a disconnect in the cannabis world too. The growers are very focused on the cannabinoid profile, the terpene profile, but at the cash register, you know, the two questions we always hear is what's on special and how potent is it. But over time,
I think we've got to shut this.
yeah,
I think we've got to shut down. So we'll leave with.
What's on special is we have to start to get ready for
Yeah.
our keynote interview. If these guys could stand up and take a picture.